All right. Hey, fellows, this is Vinney Chopra live from Apartment Syndication Made Easy. As you know, the podcast, the book I wrote, and now it's also in Spanish. Oh my gosh. Positivity Brings Profitability. Then my third book, Investing in Senior Assisted Living, all that. So look forward to, bringing out to you all. And you probably see me on Instagram, on YouTube, on Google, and everywhere. Again, this is Vinney Chopra. I live near San Francisco in Danville, Blackhawk, and I try to bring every week a new episode of some industry specialists. And I'm really, really glad that I have my good friend, Kyle today. Kyle, Shielack right there. Right, Shielack, right? How do you pronounce?
Sir. Shielack, but it's pronounced so many different ways. Right. It's all good.
Kyle and Shielack from Houston. He's been helping me to look at my portfolio for quite a few years. And he's a commercial insurance brokerage business. And let me introduce Kyle. Thank you for joining, buddy. Thank you so much.
Inviting me, Vinney.
Yeah, it's such a pleasure to have you. Let me kind of introduce you formally so that we can go dig into your, the whole business of commercial insurance, which is a very, very important part of the business in getting multifamily, commercial, everything that we do. So let me talk about Kyle. Kyle joined Higginbotham is his company, and the best in Texas as a vice president and shareholder for business insurance. Fall of 2016. He has since been named as executive vice president and practice leader for the real estate. Congratulations, Kyle. That's awesome, bud. And he started his insurance and risk management career at Marsh McLennan Agency in the Houston area, Texas, in summer of 2009. So you know the ins and outs. And Kyle holds a Bachelor of Business Administration in finance from Mays Business School at Texas A&M. That's in San Marcos, right? Is it?
College Station.
College Station, that's right. And Kyle specializes in risk management for multifamily portfolios. He's done a great job for my portfolio, and we'll talk about that. Property management portfolios, retail, industrial, office space, all kind of commercial property developments, manufacturing, wholesale, distribution, professional. Great experiences. I love that. Kyle is also heavily involved in the community in many great organizations and charities. And Kyle and his wife, Allie, and daughters are active members of their church. In his spare time, Kyle enjoys hunting, traveling, golfing, and spending time with the family. Welcome to the show, Kyle. I'm really proud to have you, bud. And
thank you.
Yeah, we're going to have fun. So tell me more. So you grew up in Texas, in Houston area, or how?
Actually, I grew up in a really small town in central Texas. Town is Rockdale, Texas. Actually was known and put on the map because of Alcoa. It's since shut down after about 60, 70 years. But after Texas A&M, have been in Houston and been a Houstonian ever since. My family has kind of migrated to Houston, and so, we've been Gulf Coast for the better part of a decade and a half now. So Houston is home for us.
Awesome. How I know your degree was in, I was just looking at it again, at Texas A&M business, right? Business degree. So how did you really get linked up with insurance? What got you?
Great question. Great question. We always joke about it in the insurance world. No one grows up saying that they wanted to be an insurance broker. Honestly, I had a great desire to be in the commercial banking space. My brother, my mother, they had all gone through the commercial lending. So I actually joined a large bank in Texas, M&G Bank, right out of college. But quickly realized that my passion was in the risk management phase. So I actually went to work for one of the bank clients, which was a large insurance broker in Houston area that eventually was acquired by Marsh. And so that's how I fell into insurance and then just fell in love with it. So
Awesome. And it's so much needed. Oh my gosh. I mean, nothing in USA and anywhere in the world we should possess or put it or buy without insurance. I mean, even ourselves, life insurance, keyman's insurance, all kind of insurances. It's so important, something that we feel that it's a cost, but it should not be considered as a cost. It's an investment for sleeping good at night and everything. And from the lender perspective, of course, they won't never give us a loan unless we get full insurance, So kind of share with us in your commercial field, what kind of insurances, maybe to our audience, then we can dig into a few of them and look at the whole spectrum. Yeah.
Okay. So on the commercial insurance side, there is many different policies that you can kind of get involved with. I'll stay more geared toward the real estate sector. The property policy is always, it's the main lender requirement. I mean, they always want to make sure the asset is covered. So we can dive into that a little bit later. Are you covering it for the asset? Are you covering it for the lender? So obviously the property policy is extraordinarily important. Included in that, you have boiler machinery coverage that's built in. We get into general liability, which is third-party lawsuits for bodily injury and property damage. Of course, very, very important for every business, including real estate, to have. Of course, you have limited auto exposure, but we can dive a little bit into that. Even if you don't own an auto, you still have folks that drive on behalf of your businesses and or real estate entities, and will most likely always be brought in on a lawsuit with regard to any form of accident to a third party. So you have auto. Workers' compensation, which in many states is required. In Texas, it's voluntary.
Yep.
And then, of course, excess liability that sits on top of all of your liability policies. So that's what I tend to focus on the majority of the time. But outside of the real estate sector, I think the big topic right now is the business interruption.
Yep.
Businesses not getting their rents in, businesses not getting their revenues in because of COVID-19 shutdowns. Yeah. And when we get into the industry hot topics, that's when I'll really like to dive into and kind of what the response is from the industry.
Beautiful, beautiful. And again, you might also talk about, like, we are vertically integrated. We've been managing all our assets, directors insurance and top management insurance, keyman's insurance, which is kind of different. It's a life insurance thing. But, how about the cyber? I know you and I worked on cyber insurance. I got hit by that. So that's another.
Absolutely.
Yeah.
Actually, yeah. And before I jump into cyber, to go back, directors and officers, I love that you bring up directors and officers. I think that is one of the most under discussed, if you will, policies. And I think it's just the idea that public entities are the only ones that need or are required to have directors and officers. But I will tell you, vast majority of claims are private companies that get sued for decisions that directors and officers make. Yeah. And so that protects the personal individual and all of their assets, including the business, as they're sued as well. So I think that was a great point to bring that out. Management lines, I think, is also a great topic. We're dealing specifically with employment practices, which is just fancy term for sexual harassment, wrongful termination, discrimination, both first and third party. And then, of course, we get into the cyber topic, which is, I would say, the better part of the last 10 years. It's been hot. Target's been hit, Sony's been hit, and these are massive claims. I will say that the most often, claim that's filed from a cyber liability standpoint really has nothing to do with malware, hardware, software, or anything of that sort. It has to do with what they tag social engineering, which is just fool me. You fooled me. You didn't hack into any system, but somehow, some way, you were able to steal money from me. A lot of folks like to look back at the old email they used to get. I'm a such and such, and I'm across the world, and I need to get out of here. Please send me money. Yeah. That was the old way. Today, these guys are so much more detailed. They will watch. The attackers will watch for about call it a year, 18 months before they ever perform a social engineering attack. So we can always dive into cyber, but I just want to point that out, that cyber is a very hot topic, and it's fascinating to see how cyber that was never spoken about in the 90s and the early 2000s is now probably the hottest topic in the industry. So.
It really is, and like I think I've read, and it happened to us also, where these attackers, they find a website with a little slip of one alphabet, and it looks like it's yours and so forth. And they copy your email and all that address, picture, everything. Then they can send
That's exactly right.
hacking into, I know they said about mail system, they hack in, and then they hack in the wiring. That's the other big fraud, is when the syndicators like me, we are very particular now. We never email anything at all, to our investors. We securely send them or call them and give them the routing number and the account number, rather than putting it in the email. And they look for that wiring, the subject lines, I guess is the word. But no, let's get into the nitty gritty of the property insurance. So, and of course the hurricane insurance, and oh my gosh, all kind of. So tell us more about it, and how do we go about getting the best insurance for the property so that investors are well taken care of? It may cost a little bit money, but it's well protected. Yeah.
Great. Okay. So before I dive into the individuals, I'll start by kind of giving the highlights of how the industry is reacting as a whole. Specifically, it's reacting heavily on the real estate marketplace. From a property standpoint, whether you're in the Gulf Coast or not, Hurricane Harvey, Irma, Maria, Michael had direct impacts on the entire marketplace. The California wildfires, the current Arizona wildfires, the same insurance carriers are being affected. So this is it's a very catastrophic past 4 or 5 years. And so when you have extreme catastrophic losses like these, and the insurance companies reporting massive losses on, for their investors and their shareholders, of course, there is a hardening of market, and that's just fancy term for the rates have gone from low to high. Mm-hmm. And I will say, out of a 10-year span, just to give investors and buyers an idea, out of a 10-year span, we say a hard market is about 2 years, while a soft market lasts about 8 years. So it'll be trending downward. There'll be some catastrophic events that will shoot it hard for a couple of years. And once profitability has stabilized, then you'll see the softening of the marketplace as well. Now, that's just hypothetical, but just looking back on the past 2 decades, we've had just a few hard markets, and we are experiencing a very hard market on the property right now. It started roughly 18 months ago, and we expect it to last probably for another 6 months to 12 months, barring no major catastrophe.
Wow.
I will say that things are finally seeming to soften up a little bit, in that they're stabilizing rates instead of continuously increasing rates. So we are seeing some positive feedbacks, but to dive into the property, I will be looking here at my screen for a second, just to make sure that I don't miss out on any major key points here. Okay. When we're dealing with property, the first thing you want to deal with is making sure your replacement cost is in sync. Always go to the covenants of your loan. That's the basic minimum. You never want to have any less than what your loan replacement cost is requiring. Little sidebar, many lenders, and they don't like me to point this out, but many lenders like to include land in the acquisition as far as being covered in real estate. Oh. That's not legal. You can't insure property. Insurance companies won't insure land.
Yeah.
So at the end of the day, it's always best to know what the appraisal shows as the true replacement cost. That is what your loan covenant should state as the true limit of coverage you're buying. To dive in, typically you have a multi-line deductible structure. The first one I like to always say is AOP. That stands for all other perils. That's essentially all other perils from wind and hail. So that's your fire, lightning, smoke, vandalism, glass breakage, water leakage. All of that falls under all other perils. I'll say the industry standard was 5,000 to 10,000 10 years ago. Today, 10,000 and 25,000 on the deductible per occurrence is pretty standard. So that's what you'd be looking at that. Diving into the wind, while it used to be, call it a flat $50,000 or $100,000 wind hail deductible, the industry, through this hardening of market, has gone back to percentage deductibles for wind and hail. While when you used to be able to get 1% and 2%, most carriers are offering only 2%, 3%, and 5% now as far as named windstorm deductibles. So something to keep in mind when you are trying to save cost in a rising market like this. The named storm deductible and all other perils deductible are two key ingredients that you can take on some of that exposure and offlift some of that premium that you'd be paying as far as what's going on in the marketplace right now. Just a few other points I want to point out before I go off of the property. Something that a lot of brokers miss out on is something called ordinance or law. Many lenders will require this, but some don't. Ordinance or law is just basically therefore you are now required by the city ordinance for a change after a loss, and it wasn't there before. The great example I like to give is sprinkler systems. If you have a 1960s, 1970s, 1980s facility, and it burns 60% to the ground, well, the city now may require you have to replace the undamaged portion of the building, you have to remove all the debris, and you have to include all of these new city ordinance, sprinklers, ACA compliance, all of these things that wasn't there before. And insurance is only there to bring you whole. It doesn't provide you coverage of something that wasn't there before unless you have ordinance or law. So always make sure you point out with your broker to discuss ordinance or law and the true importance of that. Lastly, I wanted to point out business interruption. So for general business, that's loss of revenue. So when a business were to shut down, call it for 3 months, they would claim business interruption for 3 months of lost revenue. For real estate, I like to change the business interruption term to loss of rents because that's what it is. So I want to point that out. Now, one big caveat, because we are in the season of COVID-19, I will say that a very large percentage of the marketplace, and by marketplace, I mean industries across the board, restaurants, manufacturers, real estate companies, etc., filed business interruption claims. And by the way, if you haven't, I still highly recommend, if you sustained any form of financial loss through rents, to file a claim. You will likely get a denial letter like the rest of all the businesses that are out there. And every property insurance carrier will tell you that in order for there to be a property loss,